Welcome to the Prescribing Prosperity podcast with your hosts, John and Alex Soutsos. Guys, part two is coming up. For those of you who are listening to this podcast and think, what, part two? What did I miss? You missed a really fun, fascinating conversation about taxes. And no, I'm not being sarcastic. I'm actually being pretty serious.
There were insults thrown.
Yep.
There were insults thrown. There were arguments made. There's a lot of bad blood and bitter feelings between hockey fans. So it's like, it's got everything.
But Michael Bublé was in it too.
And Michael Bublé, weirdly enough, Michael Bublé was in it as well. As
He made the conversation.
He did.
We're cultured individuals.
Yeah, so that could mean only one thing, John and Alex, that your guest is Kim Moody.
Don't forget the GC.
Oh, I'm sorry, Kim
Exactly.
GC Moody. And for those of you who don't know him, he's a CPA. He is the founder and director of one of Canada's premier tax, law, and accounting firms. And you might know him under the common brand Moodys Private Client. So without further ado, John and Alex, let's get back to talking about taxes and having arguments in it. Just a general good time.
Bill, thank you for the transition. And Kim, just a quick note. You may or may not be aware of this. But I also send out a weekly newsletter, and I always provide a link to your newsletter.
Oh, nice. Oh, thank you.
You're welcome. You've earned it. You're obviously an intelligent individual for multiple reasons, but that's the end of it. You're not a Leafs fan, so I can only go so far in my praise of you. But getting back to taxes, the question is, we've been talking about taxation as far as professional athletes are concerned. How about taxation for the rest of our economy, for business owners or even not business owners? In the course of doing business, we deal principally with medical professionals, but we also deal with mom and pop prolific savers. And the business professionals, they're always interested in tax topics. The mom and pop prolific savers, not so much, except when they make withdrawals from their RIF or except when they cash an investment. They say, I have to pay how much in tax? I don't want to pay that tax. Well, there's certain people in charge that you have to satisfy. So can you discuss about the tax impact in the economy at large?
Well, it's massive. As the short story, let me turn the tables around you, and I'll ask you and Alex a question here, and if Bill wants to chime in, then fine too. But uh, what do you think the largest expenditure is per year for an average family of four? Like, what's the top? Because of course, including there's no shortage of expenditures, right?
I'd say household, the rent or mortgage.
Okay, Alex, any guess?
I would say it's taxes.
You're
Okay,
right.
well,
It
aside
is.
from taxes, yes, you're
Nah,
right.
but I
Yeah,
asked.
yeah.
I didn't.
You submitted your answer. I won.
Yeah. You
It's
couched
tax.
it. See, I automatically discount the tax, just assume the government's stealing from me, and whatever's left over, I'm paying on for the real estate.
So the Fraser Institute, which I actually think they do a pretty good job,
I agree.
they publish an annual index of the largest expenditures, and tax has led that for years. And this just goes off the top of my head because they just released the latest one about 2 months ago, and I think the number was 43%. The average household family of four, and I can't remember what the income levels were, but it's not huge. Pays 43% of their income to tax, and it's not just income tax. They include GST and fuel taxes and any other kind of tax that's out there. But of course, income tax is by far the largest portion of that. And so when you put it in that perspective, what do you think the next level uh, uh, of expenditure is? Well,
By families, you're talking about?
yeah, by family of four. So right now we got 43% of the income is paid on taxes. What's the next level down?
Well, I said earlier, the either rent or your mortgage.
Yeah, so I'll just combine it. Food, clothing, and shelter, right? Your necessities
Mhm.
is, and again, this goes off the top of my head. I stand to be corrected by a percentage or two, but it's right around 30, 36%, I believe. So food, clothing, and shelter in Canada, you pay, call it 36% again. Somebody could correct me with the exact numbers, but taxes exceeds that number by a material portion. And when you think about that, that to me, the answer to your question, John, is how important is tax? Tax is hugely important as a policy perspective in how you design it and who you tax, et cetera, because it is by far the largest investment, if you want to use progressive language, or expenditure, which is a more more appropriate language,
Hmm.
throughout one's lifetime. So when you put it in that perspective, how many people should be taking their tax affairs a lot more seriously than they do? Probably 95%. And you probably see that in your client base.
Yeah, and this is why it perplexes me why my clients and people in general are so blasé about the whole political issue. They think, oh, that's politics. It has nothing to do with John. You're the investment guy. Don't talk about politics. Well, economics is on one side of the coin, and politics is on the other side of the same coin. Because that 43% that you itemized in taxation, that in fact is the size of the government relative to GDP in the country. And I can tell you from my own research that in the year 1900, the size of government relative to GDP, I know the US number, I don't know the Canadian number, but I guess it's very similar, was 6% of GDP. So by extension, that means taxes relative to GDP in 1900 were 6%. Today they're 43. So we've had this massive growth in the size of government over 124 years. And what has that massive growth of government accomplished socially? Have they accomplished all their objectives?
No, but has our standard of living increased? Oh, for sure, right?
No, thanks to
But
them.
we can debate that. I'm certainly no socialist, as you know, but uh, you know, but generally, I'm happy to pay tax if my standard of living is maintained or increased.
Hmm.
Do I think that we're getting good value for our dollars these days? Absolutely not. And I've written about that lots. Um, and so it's it's something that, just to your point, where people tell you not to talk, or they say it's politics, or don't talk about politics. I don't know if you've ever attended some of my webinars. We do our firm does an annual budget webinar. So literally the budget's released, or we're in the budget lockup in Ottawa, and we're analyzing it to death, and we've got lots of comments, and we put out a budget summary, but it's not like your usual budget summary. We want to, parse through the crap, and we want to make sure that we're communicating in plain English what it is. And it's amazing how political it is. I wrote about this in the Financial Post piece 2 weeks ago, 3 weeks ago. That tax and politics are inextricably linked. It's like wine and cheese. One goes hand in hand. And what I was saying in my article is that, yes, it's inextricably linked because it's ultimately the politicians that make the laws and put forward laws. Yes, bureaucrats do as well, but and get the support of politicians. But my premise of my piece is it's gone way too far on the political side, especially with our current government. And the obvious stuff needs to be, toned down a lot. And in my webinars, oftentimes what I'll get is I'll be very vocal. Sounds like you are too, John and Alex. And inevitably, I'll get somebody that will put in the chat feature, or they'll jump online and say, "Hey, Kim, tone down the politics," or "No politics, please." And my answer to them is, "GFY, this is my webinar. This is not your webinar." And I'll do whatever in the hell I want, because I have some opinions. I think they're rather grounded, and they're not just simply I hate. They're not partisan. And notwithstanding, I don't like our prime minister. I don't like his party. I don't like anything about that guy. But it doesn't matter. I'll stay in my lane on tax, and I have some very grounded opinions. And so it gets me upset when people do that, because they obviously have no idea how the whole system works and how important politics is to their day-to-day life.
Absolutely.
And in my world, that's tax.
Yeah, and in our world as well, as I noted, The only time
Yeah,
our clients complain is when they cash something in and they get shocked that they have to pay that much in income tax. Well, uh, you've been retired for a while and you're not paying as much tax as you did previously,
she
but
did.
but
Yeah.
now you're cashing in, so yeah, you're going to pay the Pied Piper. So what can
Yeah.
the country do to help increase its attractiveness to the Canadian market for people who are overseas?
There's a lot of things that Canada can do. I'm a big fan of Jack Mintz. I don't know if you follow his writings and teachings, but
Oh yeah,
and for listeners that don't know Jack Mintz, or he's a world-renowned economist, and
and a Calgary Flames fan too.
yeah, I think so.
Well, he lives in Calgary, right?
Him and I went to a Calgary Flames game together, and this is probably 2 years ago. But anyhow, he's a good guy. He's besides being a good guy, he just is very thoughtful, and you know he's got lots to say about what Canada can do. There's another guy, actually, very coincidentally, this morning I was drinking my coffee uh, and I was reading an article published by The Hub, which is an independent newspaper. Um, and I quite enjoy them actually. And there's an article in there it's called The Hub.
Everyone who's listening, take note. Independent media source, The Hub.
Yeah, and it's which is quite good. But in any event, there's an article by Trevor Toombs, who is a young and up and coming economist, actually mentored under Jack Mintz at the University of Calgary, and he's at the University of Calgary now. And he has a very thoughtful piece, and I want to actually go back and read it again because I only skimmed it quickly. But it's a very thoughtful piece on the lessons that Canada can learn from Ireland. And Jack, a couple of years ago, wrote a piece on the lessons that Canada can learn from Estonia. And I wrote about that probably 2 months ago in the Financial Post. And so just on Estonia, because it's top of mind, what Estonia did 24 years ago is they designed their tax system because they're pretty much starting from scratch. And so on the business side, they said, all right, we're not going to charge any corporate tax. If you operate your business in a company in Estonia, as long as those monies are reinvested back in Estonia, in the company, then no corporate tax. As soon as you withdraw the funds out of the Estonia company, either by way of a dividend or other distributions, that's when we'll charge a 20% distribution tax.
That sounds a lot like some American politician I've been hearing about lately.
So anyhow, so when you actually think about that system, it's quite intriguing. So what Jack
It was
did,
based on Milton Friedman.
effectively, yeah. So what Jack did is he wrote a Canadian version of that, and basically said, well, I like the model. It makes a lot of sense. It can encourage productivity increases and investment and reinvestment and growth of the economy. But I don't think we need to go as broadly as Estonia. Because let's say, for example, you reinvest the funds and you put it into rental properties or you put it into a GIC. Should that investment income be subject to deferral? I think arguably not. I agree with Jack on that, that probably not. And so, but reinvest in business, reinvest in employment, absolutely. And so I cross my fingers that if Pierre gets elected, that there's some, as Jack says, some big bang tax reform like that comes out, because boy, that would be bold thinking. And would that, put us in competition with Ireland? I want to read that Trevor Toombs article on Ireland to understand it a little bit better, but Ireland, from what I can tell from his article and certainly observing over the years, has attracted a lot of international headquarters because of their low tax rates, low corporate tax rates, which essentially you'll get there.
They went from an economic backwater to the highest per capita income in the world.
Yeah, and that's what Trevor Toombs talks about in his article in the Hub. So I think there's a lot of lessons to be learned there from both Estonia and Ireland and other countries, frankly, that we can do. And so I'm looking forward to that. And on the personal side, we need a lot of this political crap to go away, and the especially a lot of the real estate tax stuff that the government is interfering in a lot to try to solve the self-inflicted housing challenges.
That was an excellent transition because that was the next question. Let's discuss the capital gains inclusion rate.
Sure.
Any material updates since our last conversation?
No. Well, and I have to remember when our last conversation was, but the only
It was in
update
May.
was in May.
Yeah.
Okay. The only material update would be that they released the draft legislation finally in June, 2 weeks before the proposed implementation date of June 25th. So it really left people like me scrambling to understand it. And of course, it was extremely complex. And then fast forward to August 12th, they released the second round of edits to the draft legislation, which are even more complex. As one of my buddies at CPA Canada, a fellow by the name of John Oakey, said, releasing complex legislation to fix complex legislation doesn't do the tax system any favors. And I thought, beautiful, because that's exactly what's happened here is we have complex material and then more complex material to fix the complex material. And then fast forward to the end of September, we have a notice of Ways and Means motion introduced into the House of Commons to try to get this stuff into a bill, but it's been stalled ever since because of the House of Commons business has been stalled, and we're recording this in November, and who knows what's going to happen? I mean, with the NDP holding the balance of power and coming out publicly in the last few days without no big surprise, but saying that they're not going to play the conservatives' games to try and get an election, which is just silliness. But will we see this stuff eventually passed? Yeah, I think we will. The question is when. Will we see it before the end of Christmas? Highly debatable, and we may not see it before the end of Christmas.
So, my final question to you is, do you ever foresee a scenario in which income taxes are completely eliminated? Or if not, perhaps reformed in a meaningful way? I've always been an advocate of consumption taxes because then not just high income earners are asking for lower taxes, then everyone is asking for lower taxes. What are your thoughts?
I love a consumption tax. Um, I think it's a more fair system. And as long as it's designed so as to be less regressive. Um, and what do I mean by that? What I mean is if you have like even a flat tax, for example, flat income tax, personal tax, and a consumption tax, they can be regressive, meaning that it hurts the poor more than it hurts the rich. And so our GST system, I think, is a very, very well thought out system. Unfortunately, it's a little complicated, but it's less regressive because it exempts most of the cost of living, right? It
Hmm.
exempts housing for the most part,
Right.
not new housing, but all other housing. It exempts education. It exempts food, and exempts healthcare. That takes a good chunk of the regressivity away when you have a well-designed, you know, uh, consumption tax. Jack Mintz, has been always on the side that, hey, a consumption tax in favor of a personal income tax is much, much fairer. And I agree with that. But to answer your question, do I ever see that in Canada? Unfortunately, no, I don't. The tax revenues that we generate in Canada are massive. And so the consumption tax that you would have to put in place, at least on a rate basis, you'd have to jack that rate up so high that it would become politically uh,
Unpalatable.
expedient, if you want to call it. Yes. In other words, think back to Mulrooney. You and I are around. I don't know if Alex is around, but he introduced the GST very, very unpopular because it was visible, and he the party got wiped out.
Yeah, you have to offer a trade-off though. You go to zero income taxes, and then you're just paying a consumption tax, and then maybe if it's explained properly, it might be doable. But my calculation is to eliminate income taxes, you'd probably have a consumption tax in the range of 30 to 35%, which would shock Canadians. It's far more common in other parts of the world, but here in Canada, it would be.
Estonia has what's referred to affectionately as a 20-20-20 system. So they have a 20% consumption tax, which is high, right? But
Yeah.
20%. They have a 20% flat personal income tax
Right.
with with some exemptions to reduce the regressivity that I talked about. And then they have a 20% distribution tax that I talked about, right? On that for companies if you reinvest, but then if you extract, there's a 20% tax. I love that system.
Listen, that's not that high. Here in Ontario, we're a 13% consumption tax, which is
Yeah,
not that far from 20. We're a 54% highest marginal tax rate, and your dividend distributions are taxed over 30%. Income is taxed at your marginal tax rate. Capital gains are increasing, so that 20 sounds quite attractive on a relative basis for us.
I agree. And then you look at the performance of Estonia. They, like Ireland, they've been the poster childs of economic performance and productivity. It's quite amazing.
Don't you find it ironic that it's all the former Soviet bloc countries that have moved to a free market taxation system?
Of course I do. And even Europe, right? Ireland, come on.
Yeah,
I mean, that's the bastion of socialism for the most part.
Yeah.
Not Ireland, but
yeah. Europe in general.
Ireland has always been the child that misbehaves, right?
yes.
They'll punch you in the nose just for fun. Where's that Mickey Rooney when you need him?
Exactly. Geez, there's a name for the past.
That's for our digestion, Kim. Mine, yours, and Bill's.
Yeah.
So, given the way the system is right now, Kim, one of the topics that's become a big discussion point more recently has been the possibility of moving abroad,
Yeah.
whether that be to the United States or another country to capitalize on a better tax or economic or even political environment. What is involved from a tax perspective when it comes to leaving Canada? I know you've said last time on our podcast that you had a lot of clients who were approaching you and exploring the possibility of becoming an expatriate. What does that entail?
There's a whole bunch of things that go into it. A lot of non-tax issues, like number one, where are you going?
Hmm.
Number two, can you legally live there? In other words, immigration issues.
Right.
Three, what's the housing? What's the culture? And then down the list somewhere is tax. But one of the immediate things that we have to think about is what we call departure tax. Because when you become a non-resident of Canada, you're deemed to have disposed of all of your assets at fair market value. It's like when you die. Uh, and so there's some exceptions to those rules, and there's five buckets of exceptions, which I won't get into, but the five buckets are things that we ultimately look at to see, can we fit within those five buckets to get some deferral. Uh, so, for example, one of the buckets is if you own Canadian real estate personally, not through a company, but personally, and not through a partnership or not through a trust. It has to be personally. That real estate is not deemed disposed of at fair market value when you become a non-resident Canada. And so we play with that rule as much as we can to try to get deferral. And from a policy perspective, why do you think Canada is not taxing it on when you leave? Any guesses?
No.
Because do you think they reserve the right to tax when you're a non-resident Canada when you dispose of that property down the road?
Ah, yes.
Yes, yes, they do, right? Most jurisdictions around the world who are not banana republics will always reserve the right to tax dispositions of their dirt, whether to their residents or non-residents. The United States is the same. If I own dirt in the United States and I turn around and sell it, the United States has the first right to tax that. And so I have to pay US tax. And so, in other words, the reason why they exempt the departure tax is because Canada's going to get their pound of flesh no matter what. So, makes sense? So we play with that.
Yeah, absolutely.
So we play with that rule and all the other exceptions just to try to minimize the cost and then look at that. So
So if I wanted to leave
yeah,
and I wanted to, let's say I wanted to move down to Texas because I'm a big fan of paying no state tax. Um, and my son really loves the Dallas Cowboys cheerleader show on Netflix. Um, we, which is true. I have a video of him asking to watch girls dance. So, anyway,
That's funny.
so let's say that we're moving down to Texas, and I got to sell my house. So if I were to sell my house, Kim, um, and I become a non-resident, what would I have to do? What are the steps that I would have to take in order to not pay tax on that disposition? Because your primary residence is not taxable.
Yeah, so generally, if you're selling before you move to Texas, in your example, you're going to claim the principal residence exemption with no tax.
Okay.
And now the trickiness will be if you have a cottage property,
Mm.
or another property that you use. Now the question is, okay, do we claim? Let's say you're going to sell your main property but keep your cottage property. Well, there's some complications there. One, when you retain a cottage property, are you actually giving up residency? And so we have to look at that, because generally, if you have a home available to you, that is a strike against you for becoming a non-resident Canada. So we have to really look carefully at that. And then, but that issue aside, if you need to sell your main property in order to buy another property, say in Texas, you're generally not going to pay tax on that, subject to whether or not you want to use the principal residence exemption for your cottage property, because you might want to save it for that.
Right. If
And
it's
if
worth more.
because maybe the cottage property has gone up like that, and your other property's kind of snaked along, right? And so there's things like that we have to look at.
So logistically speaking, I own my one piece of dirt here, and I'm 33 years old, so I can't afford a bigger piece of dirt. So it's just the one.
Yeah.
So I sell my home here. I temporarily either rent something or move back into my parents' home while I look for a place in Texas. I find it.
What? John, really? You're going to allow that?
We're doing renovations. There's no space here.
That's exactly right.
Whatever.
There's a movie about this, by the way. What was that? What's that movie? Um,
What, failure to launch?
Failure to Launch. And so I've got four sons, and one of them is lingering. So I'm threatening to create a naked room.
Oh, nice. The Terry Bradshaw naked room.
Do you remember that part of the movie
Oh
if you've
yeah,
watched Failure to
yeah, yeah,
Launch?
yeah, yeah.
Yeah. So
Kim, you're playing right into my friend's stereotype. When I told him that you were coming back on, he said, "I picture Kim riding across Alberta, bare chested, and beating the crap out of lefties on a motorcycle. Sorry, riding on a motorcycle, bare chested, and beating the crap out of lefties." So,
I mean, I'm pretty good shape, but I'm only about 5'3" on a good day. So
okay.
so I don't know if I could pull off that biker image that well.
That's fine. We'll leave it for his imagination. But anyway, getting back to the scenario at hand here. So I sell my place. I rent something temporarily just until I find something in the United States and Texas, and I buy my plot of land over there, my house, and then I'm okay from a tax standpoint in terms of liquidating my home.
Yeah, you should be by claiming the principal residence exemption. Yeah, you should be.
I've heard from. I'm sure you've seen Nomad Capitalist, Kim, and he talks about establishing potentially three different locations where you live, but selecting one of them as your residency, and then the other two you can spend time in. So you could theoretically spend 6 months plus a day in Serbia, let's say, and then split the remainder of the time between Florida and Toronto. Does that work for people looking to cut taxes?
Yeah, I'm not intimately familiar with that fellow, although I've certainly seen material. But here's the issue I have with people, or sorry, with plans like that, is that residency is a question of fact. It's not a question of intention, at least for tax purposes, right? And so, so I might, hopscotch around in three or four different locations, but it's going to be my facts that determine where my residency is. Now, a lot of people don't understand that, and or don't appreciate that just because you intend to be a resident, using your example, John, of Serbia, that doesn't make you a resident for tax. And so we really do have to watch your facts quite carefully, and um, ensure that ultimately you get the desired result that you're intending.
So what would be the primary fact that gets looked at? Is it number of days in residence at that particular country?
Days, whether or not Canada has a treaty with the particular country that you're dealing with, because if they do, then they're going to have, like we talked about in episode, the previous episode, part one, about, the tiebreaker rules,
Right.
right? And so we're going to have to look at that and determine how do they break?
Right.
What are the factors they look at? One of the most common factors, usually the first one in the tiebreaker rules and treaties, is do you have a home available to you?
Right.
And maybe you don't, because maybe you don't own, and maybe you don't have a long-term rental. Short-term Airbnbs is generally not a home available to you. So you have to think about stuff like that.
Okay. Okay. So in that situation, in order for you to escape the Canadian uh, tax as your primary residence, you would have to have no permanent residence here. You would have to live most of your days in somewhere else, and if whenever you did come here, you're relying exclusively on short-term real estate rental options in order to avoid this being classified as your primary residence.
Yeah, I would agree with that. Did I ever tell you my hockey player story?
Not all of them. I'm sure you have more than one.
So let me tell you a story. Um, so I've lived in various neighborhoods in Calgary, and in one particular neighborhood I lived at, there was a hockey player that lived a few doors down from me. And this fellow had a cup of coffee in the NHL but played the majority of his um he was a professional athlete for a better part of 20 years. So he played most of his career in Europe. But for the vast majority of time, his house was empty. In other words, so he'd come back to Calgary during the off season. So one night, just getting to know each other, and this is probably year 3 or 4 of being neighbors, and he came over for a glass of wine, and he's bragging to me about how he doesn't pay any tax on his salary and blah blah blah, and I said, "What? You're taking? Are you serious? You're taking the position you're a non-resident of Canada?" I said, "Let me see your driver's license." So he pulls out his wallet and Alberta driver's license. I said, what about, where's your investment accounts? Oh, they're at XYZ, bank branch downtown Calgary. Uh, and your house, you're not renting that house out, right? He goes, no. I said, and you're taking the position you're a non-resident of Canada. Good luck to you. I said, because frankly, a person like that, and by the way, that's the last time we ever talked tax.
Oh. He didn't like that
Because
answer.
no, because he was getting his advice from obviously somebody who has no clue, and more than likely his agent. And so the big strike against you is if you have a home available to you, whether it's, like my hockey player buddy who had his house vacant for 8 months of the year, or a bedroom. One of the things I hear often is, I'm going to rent my house out. I'll rent it to my kids, though. Oh, yeah, that works real well for sure. You think a judge is not going to be able to look past that
No
and
one's
say,
going to
where are
see
you
through
staying?
that obfuscation.
Yeah. That's just ridiculous stuff, right? So it has to be, I always tell clients, it has to be real,
Right.
and if you have a cottage property available to you, that's a strike,
Yeah.
right? Are you renting that cottage out? Are you renting your home out to a long-term rental, minimum a year, in my view, and ideally longer if you want to keep your home.
Right.
Um, and to me, that's the primary thing that people need to do is to make sure that if you're coming back to Canada to visit the grandkids, great, but make sure you're not living in your own home or your former home. Ideally, it'd be hotels or Airbnbs.
But Kim, I don't understand. If I move to Timbuktu, low tax jurisdiction, spent 7 months of the year there, purchased a home there, why can't I own a home in Canada?
Because it makes it look like you never left.
Even though I spend 7 months of the year in the other jurisdiction in a home I own there as well?
Absolutely. You need to make a clean break. The courts are quite clear about this. You need to make a clean break from Canada. And if you live 7 months in Timbuktu, country, wherever, and you come back for 5 months, for example, which is very common, right? People
Hmm.
want to come back during the summer months because it's beautiful here.
Hmm.
Um, but but the first question is, have you ever made a clean break from Canada? Because you need to sever your residential ties. And the short answer, generally, if you've done that, in other words, you've kept your home available, is you have not,
Right.
because you have a home available to you.
Right. So,
So that is a real problem.
Or we can have a government come in, cut taxes to 35% and reduce the incentive for people to leave.
Well, and that's just it, right? And I've been on my bandwagon forever on this is let's make it easy for people to stay.
Yeah.
Let's not create the conditions for people to that want to leave. Tax is usually not the top of the list for people leaving Canada. But it certainly can be a huge motivator, especially when the other things on the list are now coming to the forefront. Like who wanted to be in Canada during COVID? Certainly not me.
Although actually, you were in a pretty good position there, Kim, in Calgary. I had the pleasure of visiting Banff when I was on a bachelor party, and that would have been, I want to say, 2021, if I'm not mistaken. Yeah, summer 2021, or was it 2022? It might have been 22. But in the very compared to what we had here in Ontario, what you guys had was a wide open free for all, whereas here we were still locked in our houses, masked up, and mandates to visit certain places, and it drove me nuts. Whereas
Yeah, but compare that to Texas
oh, I know
or
nothing,
Florida,
nothing. I know
right?
Sweden,
So
yeah.
Before you ask your last question, I just want to make an observation here. So the Calgary Flames uniform contains some orange in it, does it not?
I know where you're going with this.
Actually, yellow.
You notice Alexander's office has blue, right?
Yes, and my office is orange. Yes, I
Yes,
get it.
yeah.
I'm a real socialist. Yes, for sure.
His
By the way,
glasses
my
are blue.
car is orange.
You own a gremlin?
Yeah, no, I have a Maxima.
Okay, I was going to say Nissan makes orange cars. That's one of
They
their
do?
Yes,
signature
they
colors.
do.
Yeah.
So
And,
does
and
Lamborghini.
Yes.
that's true, they do.
There we go. We got to get Kim a
But
Lambo.
I happen to like the color orange, not the color it reflects
Yes.
on political parties, John. But thanks for that observation.
That's fair. Anyway, Kim, last question because we're gonna have to get you out of here soon. But it's a two-parter. Number one, where is the most common jurisdiction that you're seeing people move to if they are leaving Canada? And number two, does income play any role? You know, for example, for somebody like us, where our clients are primarily domiciled in Canada, if we were to move abroad and deal with Canadian residents, does that prevent us from being able to claim that we are no longer residents and not pay any tax here?
Well, I'll answer the first question because it's easy.
Mm-hmm.
And then I'll ask you a couple questions. I'm not sure I fully understand your
Mm-hmm.
second question, but the first question, by far, probably 95% go to the United States,
Right.
which tells you right then and there that it's generally not tax motivated, right?
Right.
It's tax contributory, and generally your tax load is going to be less in the United States. Even if you go to crazy California, for example, your average Canadian will pay less tax in California than they will in Canada.
Sweet mother of
And
God.
for, which is craziness, right? Now, your high income earners, like very high income, which is generally who I deal with, are they going to California? No, they're not.
Yeah.
There's the odd one that does for lifestyle and they try to limit their income, and it's usually in retirement years, right?
Right.
But by far and large, 95% are going to the United States for lifestyle reasons, for language reasons,
Mm-hmm.
cultural reasons, and access to Canada reasons,
Right.
right? Because they want to come visit Canada, what have you. I've had a number of clients go to Europe, Portugal in particular, because of which they don't have this anymore, as I understand it, but some very sweet immigration policies. I've had a number go to, a very few go to the so-called islands, Cayman Islands and Bahamas or what have you. Everybody talks about offshore, tax savings and no, not very many go there
Yeah.
because to become a non-resident, you actually have to live there. And as much as it's sweet, you have to get used to the island lifestyle
Yeah. Gets boring after a while.
and the related costs associated. I have a friend who's recently moved to Bahamas, and so far they love it. They're in the honeymoon stage. I have a little ongoing bet with this person how long it's going to take before they want to move back. So we'll see.
Okay.
But and but and then there's the odd one that is going to I've had one recently go to Greece, and some in the UK. Used to be much easier going to the UK. From a tax perspective, they've tightened down their rules on that. So that's the easy one. Now, in your second one, maybe expand that a little bit more, just so I understand.
So basically, if somebody like us who deals primarily, our income is derived from managing the assets of people who live in Canada.
Yeah.
If we were to become a non-resident, we sold our homes, we were to move to Texas, and we were to live in Texas as our primary residence, but we were to find a way to continue to do our business from Texas, but with Canadians. Would that limit us in any way? Would that be one of the criteria used against us being considered a non-resident?
Well, I won't give you a definitive answer because as I mentioned already, residency is a question of fact.
Right.
And so we'd have to look at all your facts. That one of the things that we would look at very carefully is the fact that you're servicing Canadian clients and that your business may still be in Canada. And if it is, then the center of economic interest argument, is the center of your economic interest still in Canada,
Mm-hmm.
or has that moved to the United States?
Right.
And because you want it to have moved to the United States. And your argument obviously would be that, well, hey, I carry my day-to-day business operations in Texas. It's all done virtually, et cetera, et cetera.
Right.
And yes, I have the odd visit that I come back to Canada. So all to say, is it probably doable? Yes, especially in this day and age of mobility and virtual and internet. And but that is something that you'd have to look at carefully.
All right, perfect. I'm telling my wife, pack your bags, we're going to Dallas.
There you go. Or San Antonio, like where I was last week.
It was beautiful, isn't it? The Riverwalk there in San Antonio.
That's where I stayed, was in the Riverwalk. Beautiful, beautiful place.
And they
So
have big ribs, huh?
they have big ribs,
Yeah,
big barbecue.
Brontosaurus ribs like this.
Yeah,
Nice.
Flintstones.
Flintstone ribs.
John, I grew up in Texas. Okay. So San Antonio is like the Riverwalk in San Antonio is deceptive because San Antonio is actually in the middle of a pretty arid area, like almost a desert. And the city has done a really, really brilliant
They
thing
have.
by building around that river, and it is amazing. And whenever you go there, and you can walk along that river walk and forget where you are. It's just
Yeah.
like it's gorgeous.
And full of history, right? I mean, the Alamo, which I knew a little bit about, but just hanging out there, wow, kind of neat. So highly recommend it.
You've got to watch more John Wayne movies, Kim.
Yeah, I do.
And I would encourage you to move to Texas as a former resident of Texas. It's a great place. The problem is, guys, is that all of you people who are used to socialism are moving to Texas and turning Texas into a socialist capital. So,
I have other options. I want to go to Greece and have tax-free feta.
On that point, Bill, there was certainly some elements of progressivism in San Antonio that I saw that shocked me a little bit, but
You're breaking my heart now.
Well, that's because all of the people, we recreate where we came from. So, and I've been laughing to all of my friends who've remained in Texas. I said, have you noticed things are changing? Because everybody from California, everybody from all of these states are coming there. And he's like, yeah, actually, now that you mention it, there are things, I'm like, yeah, well, so
yeah,
we shall see. We shall see. One of the best, most attractive things about Texas, and there's lots of things I find attractive about the state, is that the government there is biannual, meaning that it only meets every other year, and they're not paid. So they got the right attitude about their legislators. Okay, as far as I'm concerned.
Isn't New Hampshire like that, where they're not paid, the state governor?
I don't know. Actually, I really don't know. I don't know the answer.
Yeah,
to that.
you should take a look at New Hampshire. I think they have something similar at the state level. Never mind the city level.
Too cold in New Hampshire for me. Too cold. And I might sometime. I've been in Toronto a couple of times, but now that I know there's a 53% chance, I know a 53% tax there. I might be much more inclined to make my trip to the Calgary Stampede.
Well, you might have to, because their hockey team as well is amazing as compared to the Leafs. They suck.
I don't know. I don't like the colors of the team, frankly speaking. Nothing better than Maple Leaf blue.
And, come on.
And Michael Bublé sings about the Leafs. He doesn't sing about Calgary. Sorry.
I don't know if that's a good criteria.
It's
for
Friday. What are
singers.
you
Let's
doing? Are you actually working on a Friday? Give me a break.
let's wrap this. Let's wrap this up.
Okay.
This has been fun, but let's get out of here. First of
All right.
Alex and John, before we get to you, I mean, if people want to get in touch with Kim, Kim, is there a way that people could, or either learn more about you or connect with you that for listeners who are listening to this conversation and thinking, I actually think not only is he entertaining, but he's actually smart and I'd like to get a hold of him. Is there a way for them to do that?
Sure. On my website, I have a personal website at kimgcmoody.com, and I've got a lot of content there. And so feel free to go take a peek at that. Or my the firm that I founded and still a part of is Moodys Private Client.com. So Moodys and then privateclient.com. So those are the two of the easiest ways.
Yeah, I'm going to have to check out your personal website because you mentioned a couple of economists that I really want to know more about, including Jack Mintz. So it'll be
Yeah,
interesting to
super
read.
good guy.
Alex,
Yes, sir.
for folks who are listening to this podcast who want to get a hold of y'all, how do they do that?
Best way to do that is to send us an email at info@medwealth.ca. That's info@med-wealth.ca.
Very good. Thank you, guys. A very entertaining episode. For those of you who are listening to this episode and are not subscribers to the podcast, fix that by hitting the follow button and becoming a subscriber. It's really easy. That way, the next time a new edition of this podcast is dropped, you will be notified and you can listen to it. I would also add that if you like this podcast, tell people about it. Okay, please? Word of mouth. It's great. It's wonderful. Spread the word about what we're talking about here. Until next time, I'm Bill Tucker on behalf of John, Alex, and everybody at MedWealth. Thank you for taking the time to listen today. And remember that you can go out today and have a great day or not. It's up to you. It is your choice. Have a good one. Until next time.
Thank you for listening to Prescribing Prosperity. Visit our website at med-wealth.ca. That's med-wealth.ca for more information or to connect with us for a consultation. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and their guests and does not necessarily represent the views or opinions of IPC Securities Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investment advice. Always seek the advice of a qualified and licensed financial service provider with any questions you may have regarding your investment or retirement planning. MedWealth Financial Services can provide a private consultation to help you determine the suitability of any guidance discussed on the show.